Joining us, USAA Investments Vice President of Equity Investments, John Toohey, and with us here at Post 9, J.P. Morgan Asset Management Global Market Strategist, Gabriela Santos. Good morning to both of you. Thank you for joining us. Gabriela, a day like today, we walk in after reading reports over the weekend that the Treasury is looking at blocking Chinese investment. Just thinking about how the market looks at all of these trade developments, is that potentially more worrisome than what we've had so far?
Well, I think it's all part of the same mosaic, right, which are rising trade tensions. We have some signal they're not going away anytime soon, and there are actual measures being put in place, but there's still a lot of noise, right? These measures aren't final, neither are the tariffs on China. We have investigations going on in auto and auto parts. So there's some signal, but still a lot of noise, and that's what everyone's trying to digest. What are the potential direct and indirect impacts on the economy and on earnings?
So, John, as a big investor, what do? Do you tune out the noise, or are you making some moves?
Well, I think you have to stick to your strategy and sit pat for the moment. I would agree with the sentiment that there's a lot of noise out there. The challenge, though, is that any of these trade and tariff discussion, if some of these things go through, whether the reason is to reduce the trade deficit, whether it's security concerns, it's going to hit sales. We have global supply chains now. S&P 500 exposed about 40% to manufacturing. Disrupt the global supply chains, you get to hit the profit margins. And then the sentiment hit, which hit multiples. So you could get revenues hit, earnings hit, multiples hit. But what we would recommend is until settles down to what the actual policy is, just sit pat with your strategy.
Norma, we've been through this a few times now in recent weeks, and you could always rely on the comp, you could always rely on the Russell. Not happening today. Is there danger in tech leadership failing us amid everything else?
Well, I think the underlying drivers for strong earnings growth in tech are still there. I think everyone's still trying to digest, though, how much this is actually impacting the potential for really strong U.S. revenue growth, right? Remember, we got last week some interesting data from the market PMI survey, which showed some softening in the U.S. So there's some anxiety about how much that is really being driven by some of these trade tensions, softening confidence.
Sure. So
I think this is really what's driving the mood here today.
Right. You got the VIX above 16 now. A few minutes ago, it was above 15. Takes you back to May, end of May. And 10-year below 287, right? So definitely. Are you in the camp that we topped at 312?
No, we're not. I mean, who knows for the next couple of weeks or so, as we do have a bit of a risk-off sentiment here. But ultimately, we still think the economy is still doing well. That still gets us to rising 10-year yields over the next 12, 18 months here or so.
John, just to dig into your answer a little bit as to what you're doing as a portfolio manager, you say stay the course, don't do anything different, and then you talk about falling profit margins, EPS growth, and sales growth. So are there particular industries that you're trying to stay away from as these trade tensions escalate?
Well, I would say the risks are what I outlined, the sales growth and profit margins. But to your question about what we find attractive, parts of tech, one theme is digital, whether it's the digital payments with a Visa, it's the digital experience for customers of Salesforce.com, or it's the digital advertising like Facebook. Those are all secular growth areas and should be immune to trade. Other areas, U.S. certainly strong. We would agree with the sentiment that U.S. economy continues its path of strong economic data. Look at companies that are tied to that with strong capital return. We think regional banks, like a Key Corp. And lastly, my comment on, sort of stay the course. There's a movie, Ferris Bueller's Day Off, a few decades ago. I was watching it with my teenage daughters. It talks about tariffs and trades, but one of the lessons there is not just about tariffs and trade and Hawley Smoot, but, take a day off, clear your mind. That's what helps us stick to our strategy. You don't want to get whipsawed based on some tweets or a policy that's not in place.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.